Happy lunch hour, guys. All right, still Thursday. I'm still cloudy and rainy and fine. No big deal. But days like that give me a good chance to get in and go through some emails, take a look at what's on your mind in a little more depth rather than at the end of the day sit down and zip through them. A lot of questions I'm getting lately from you guys is what's going on in the gold and silver market? Why is gold and silver down again? Okay, and it has been here pretty much for the last, I think every day this week it's been down. Okay, so what's going on? Now, I want to start here saying this, okay? And this goes back to what used to drive me nuts as a broker all my years on Wall Street, is people always wanted to buy a stock when it was up, and then when it was down, they'd freak out. It never made sense to me. They'd buy it when it was high, thinking it was going to the moon, but when it was down a little bit, it's like, oh my God, it's going to zero. Okay, not happening that way. Most stocks don't go to zero. Gold and silver will never go to zero. Yeah, I know some of you guys are going to get biblical on me, but we're not that far into Armageddon. It's kind of like going to the grocery store and ground beef is $5 a pound, and you're going, okay, I need to buy ground beef. The next day you go in and go, ground beef's $4 a pound, it's on sale. Now I'm going to wait till it goes back to $5 and then I'll buy it. Okay, that's the mentality people invest. It does not make sense. When something's on sale, that's when you buy more. Is gold and silver on sale right now? Pretty much, yes. We should be hitting near close to bottoms. Okay, silver should has very good support right around $22 an ounce, and silver's right now trading just under $22.50. So we're pretty close to the bottom. Don't try to pick the absolute bottom, guys. Gold at 19 and a quarter right now. Intermediate term support, long term support on gold is probably $17.50. Could it go lower? Yeah, it could. It could drop another $175 an ounce. Not saying it's going to, but that's about as far as it should go down. So what's going on? This is the big question. What's causing this to happen? And you'll hear people say, oh, gee, it's just the dollar's getting stronger. No, that's not really it, okay? The dollar is still trading at about 101, so a little bit better than par, even with where it should be with currencies around the rest of the world, okay? What's going on is about 2/3 of the price of gold. The reason it's going down is because the market is predominantly sellers right now. With what we've got going on today, 2/3 of the pressure on gold is from sellers, and about 1/3 of the pressure is the dollar getting stronger. Okay, so just giving you that idea. Again, we're talking supply and demand. More sellers means something goes down. More buyers means something goes up. But you have a caveat with gold and silver that's different than the stock market. The stock has a set amount of shares. Let's just make math easy. There's 1,000 shares of stock out there for any company. So it's only going to be based on buying and selling what the company does, et cetera, et cetera. More buyers, more sellers, that's it. There's only 1,000 shares. Gold and silver are different because the world is still mining gold and silver. Okay? The U.S. is the 4th largest gold miner in the world. Okay? China is number 1. Australia is number 2. Russia is number 3. And the United States is number 4. And just to give you an idea, China mines twice the gold the United States does. Okay? On the other side of the fence, if you think about this, China doesn't sell their gold in the open market. China keeps all their gold. Australia, the United States, you think about it, you can go buy stuff from the Perth Mint or something from the U.S. Mint. It's sold in the open market. You're not buying anything from who knows what it's called, but the Beijing Mint or the Shanghai Mint or something. You can't get that. All right, China keeps theirs. So this brings up BRICS, which you guys have all heard about. Now, whether y'all know or don't, the BRICS countries, which are adding more to the fold daily, it seems, are planned to roll out their currency, the BRICS currency, in August, third week of August, somewhere between the 20th and the 22nd of August. The BRICS currency, as we are being told, is going to be a gold-backed currency. Brazil, Russia, India, China, South Africa. Okay? Now, if you notice, I mentioned both China and Russia in BRICS, two of the top 3 gold-producing countries in the world. So they are stockpiling their own gold that they are mining, which between the two of them is somewhere around 680 tons a year that they are doing. Okay? But they are also buying gold on the open market, which means they're buying it from Australia, buying it from the United States. They're buying our gold and keeping theirs. How much? Well, in the first 2 quarters of 2023, which is basically from October 1st of last year through the end of March, combined between China and Russia alone, they have purchased on the open market 133.1 tons of gold. It's a lot of gold. Okay. Now, all things considered, they've purchased 133 tons. The United States produces 190 tons a year. Not saying they're only buying it from the U.S., okay, because Canada produces 170 tons, Ghana produces 140 tons, whatever it would be. All right, there's quite a bit. I told you how much, we're worldwide. We produce nearly what was the number? I forget. Said there at the top, and I just completely lost train of thought of what it was. But what Russia and 990, I think it was 995, something like that. What Russia and China produce is about 1/8 of the world's gold a year. So they're buying the rest. So now you have this scenario where they're buying it on the open market. So that means all these other countries, Canada, the United States, Ghana, Australia, Indonesia, whoever is selling gold, that's where it's going down. They're not selling theirs. So they're buying all this gold cheap. And silver comes right into play. So, I mean, you can use either two of these interchangeably, guys. They kind of move relatively in tandem for the most part. But with the BRICS currency going to be gold-backed, and they roll it out here in about 8 weeks, okay, what would most people rather have? A currency that is backed by gold, backed by silver, backed by precious metals as a whole, or something that's backed by, the full faith and credit of the United States government? What the BRICS nations are doing, and you guys are all well aware of this, is they are trying to take out the petrodollar. They are trying to stop the dollar from being the world reserve currency. And they're doing it by trying to corner the market on gold, because now all of a sudden, if the US dollar is backed by Joe Biden's word, okay, and the Chinese, whatever, Russia, BRICS currency is backed by something that's tangible, people are going to, and countries are going to start wanting the tangible asset. This is why for the longest time you're hearing states going, we're making gold and silver a currency, a legal tender to use in business transactions, whatever it would be. Because everybody, except for the idiotic governments around the world who are actually selling this gold, see the writing on the wall. So you look at the price of gold and silver right now. That's why it's going down, because the countries, let's just use the United States as an example. We're selling our gold. Who knows what we have in Fort Knox? It hasn't been audited since the 1950s. If there's anything left there, who knows? All right, so any gold that the United States have, we're selling on the open market, and China's buying it. Why? Because Joe needs to finance all these boneheaded ideas he has, like, let's send it to Ukraine. We found another $6 billion from an accounting error. What are we going to do with it? We'll send it to Ukraine. So we're selling off our assets to finance stuff in other countries. Well, China and Russia are going, yep, we'll just keep adding it and adding it and adding it. And very soon what we could see happen is the US dollar completely collapse, and everything is done in gold and silver. And all of a sudden, instead of you having dollars in your wallet, you have gold notes from China. That's a real possibility, guys, if the only money in the world that is tangible is run by China. Think about how that starts affecting everything. Now China controls what is going on in the United States. Not politically, not by war. They've just completely taken over our economy, which has completely taken over our country, without ever using one piece of lead. Okay? This is how dangerous this is. What is your only way to protect yourself of this? To have some of that gold and silver in your own pockets. Because, you hear everybody talk about FedNow starting in about 10 days. Okay? FedNow is not a cryptocurrency. Again, I'm going to reiterate that. It's a medium of exchange, overnight, instant exchange between banks, so you're not waiting 3 days for a check to clear or whatever it would be. That's all FedNow is. Is it the precursor for CBDC? Yes. Is the IMF, the International Monetary Fund, trying to come up with a worldwide CBDC? Yes. So let's just say that they come up with a worldwide CBDC, that everybody in the world uses the same kind of money. No more exchange rates, no more nothing. It ain't going to be in US dollars, all right? If the BRICS currency is backed by gold and silver, that CBDC is going to be in that BRICS currency. Where the catch is, you need to have some of this, some tangible money that is going to save your butt. Because here's the deal. Eventually, the Chinese and the Russians have got, and India and everybody else in BRICS has got all the gold. The United States has basically sold out. Joe's completely crashed our economy, which you guys know is his intent. Okay, he wants to crush the United States. The price of gold should go through the roof. Okay, I mean with all the buying, with BRICS coming out in 2022 in August, that should drive the price of gold up to about $3,000 an ounce. We're slightly below $2,000 an ounce. It'd be a 50% return on your money in 8 weeks. I don't think anybody can complain. Am I promising you that's going to happen? Oh, hell no. Okay. But mathematically, that's what should happen. Now, we all know about manipulation in the markets and everything. So, paper gold versus physical gold. You guys know as well as I do that there's 11 times as much paper gold traded, futures or whatever it is, than there is actual gold. I mean, if everybody wanted delivery on the gold, they can't do it. Okay. For every 11 ounces you own in paper gold, you might get one. Okay. Just giving you that as a fact. But this is the thing. Gold and silver prices are down right now. They are on sale, guys. If you have the ability to go out, and even if it's buying one more silver round, finding one more pre-1965 quarter, dime, half dollar, silver dollar, or whatever, you find it, keep it. Because it could be a mere 2 months until you're very happy you did. Because it might be the only thing that's worth anything in your wallet. Pinball out.